Miki, talk to me, my friend.
Yes,
Now that you
sir.
now that you're, I'm just gonna call you not Crypto Mickey, but Uber Bear. Uh, Mickey, you brought up the question of recession, and that's actually our first trading challenge of the day today, because I mean, you seem to be very much in the camp that recession is inevitable. Can you run me through why you think recession is inevitable at this
Okay.
point? What are your key arguments for it?
Yeah. So my opinion is, as the Fed raises the rates, the economy is going to slow. And right now, we have extremely high inflation, but they're not raising the rates to the point where they can fight inflation and control it. In my opinion, inflation's out of their control now that we're at 7.9%, and they're expecting 8.2% next month. And with rising prices, this puts a lot of pressure on the economy. And with at the same time, raising rates puts a lot of pressure on the economy as well. And I don't think that they'll be they'll be able to handle it at this point. They're gonna have to either choose to tank the economy or tank the dollar, and I think they might choose the dollar if they fight rates accordingly. And it's gonna send us into the probably the worst recession that we're ever gonna see. It might even be a depression at this point. So
Okay, well,
yeah,
that's a very unique view. I don't think anybody is arguing for a 1930s
yeah.
type of depression at this
I
point.
mean, you never know what could happen, but like I don't have a very bullish outlook on the traditional markets because of what the Fed has done with monetizing the debt and their monetary policies. I think at low
Um,
interest rate, I think the whole market has been propped up on a low interest rate environment since like
Correct.
2008 when they dropped the
Hmm.
rates to zero, and it was
Yes.
QE1 and QE2, and then COVID happened, and it was, oh my
Right.
God, it's like the biggest round of QE we've ever gotten, right? And that's kind of been the Fed's solution to delay the recession, right? You just stimulate the economy by printing more money. Now that we have high inflation, that solution is out of the question. Unless you want, 25% inflation, then you're going to go back to QE,
Well,
right?
the argument, the counter argument to the inflation issue is that some people argue that higher rates will do nothing to curb inflation because inflation at this point is a supply side phenomenon. It's not a function of the fact that everything costs more. It's just simply a function of the fact that we can't produce enough for the demand that we have because the supply is constrained by um, geopolitical factors, oil, and all the other things that are really not going to, you could put rates to 5%. It's really not going to have any impact on how much inputs are going to cost because they're still hard to get. That's really, the issue. So what do you think, what do you think about that kind of argument? The
That
Fed's
that is
monetary policy,
yeah.
if the Fed did nothing or if the Fed did everything, would have zero impact on inflation itself because it's not a monetary phenomenon at this point.
Yeah. So that is a great argument because inflation, most people think that inflation is prices rising, right? The Fed has branded it as prices rising,
Right,
but before
right,
that, inflation was the expansion of the balance sheet of the money supply.
right.
So right now, it's expanding the money supply. One of the symptoms is rising prices.
Mm.
So right now you guys see like a lot. I do agree, like supply chain disruption does bid up prices, but putting more money in the market also helps bid up prices as well.
Correct.
So when you start to
Correct.
take that away, then you can let prices start to go down. But when prices start to go down and times get tough, the Fed just prints more money, more quantitative easing to help bid up prices even more. Yeah.
So, despite the fact that we have record low unemployment and relatively, strong growth on a nominal basis, not an inflationary basis, obviously,
Yeah.
um, despite the fact that, oil is, well, let's just talk about that. Oil is essentially actually coming back down. We're trading 103 today, basically trading 100 to 105 right now as a balance. Um, what will really convince you that the recession is inevitable? Is it oil going to 120 and holding? And conversely, if oil drops to 80, will you moderate your view of a recessionary scenario?
So I've also expect oil to come down to maybe around $75 a barrel, maybe by the
Uh,
end of the year. but that may not be because like we're headed to a recession. That's probably because like I think the war might come to an end eventually. I mean, hopefully, like I really hope the war will come to an end
Yes,
sooner than later, because
of
it's
course, all of
it's
us
an
do.
atrocity right now,
Of course,
and that
yes.
will help push oil prices down. I know Biden's doing this short-term solution of releasing
A
oil
million barrels a day.
yeah
Yes.
1 million barrels a day from the emergency
Right,
reserve to
right.
try and help push oils down, but I only see that as a temporary solution. In my opinion, what's gonna make me like 100% sure that we're going into a recession is what's the Fed's next move is, right? I want to see
Well,
what
I
they
mean,
do in May.
do you have any doubt that the Fed is going to hike?
No, I don't have any doubt, but I want to see, because they've now said that they are committed to fighting inflation. They said no matter how bad unemployment gets, no matter how bad the economy gets,
Right.
we are committed to fighting inflation. Now I think actions speak louder than words, so I want to see them raise their rates significantly more than what they're doing right now, because a quarter point rate hike against 7.9% inflation is kind of a
Right.
joke. It's kind of a joke, because when you
Yeah.
had 12% inflation or like 13% inflation in 1970, you saw Paul Volcker raise rates to like
Right.
20%, right?
Right.
So
Right.
why are we doing quarter point rate hikes?
Well, we all know the answer to that, and I think your hopes are going to be wasted. We can't we don't have we're in a situation where the budget deficit of the United States of America is so large that even a quarter point hike in rates is a significant cost to the U.S.
I
government,
know that, yeah.
and
That's why
therefore
we
there's
can't raise it.
the days of 1% hikes are just not going to be happening. But that's interesting. Etienne, I kind of want to just ask you. I know you don't follow fundamentals quite a lot, but just sort of from, let's say, the FX market, where you're watching it quite a lot. There's conversation about recession, conversation about global slowdown. Are you seeing any evidence of that in the FX market right now?
I would say yes, a little bit of crazy moves. We had big moves in the Japanese yen in the past. We had big moves in different pairs as well. So I would say yes. Here in Thailand, like
But
where I am, where I see
but
things,
I
there's not
guess
really any sign of that. But in terms of Forex, yeah, a little bit more. It's crazier
so.
moves.
But here's my question: the typically the recessionary moves in yen is for yen strengthening, but we've had this massive move of yen weakening. So wouldn't that be signaling that that it's a risk on carry expansion trade that we're seeing, which is actually the FX market sort of sending a counter signal to the global recessionary flows will mean that everybody's going to take the money back into yen, but we're not seeing that at all. We're seeing the opposite. What do you think of that? Or do you think that
Yeah,
we're
which is
having
part of the market acting a little bit irrational these days. Like the S&P is going down, but then the yen is going up, so it doesn't make much sense. I mean, the yen is going down, so it doesn't make much
yeah,
sense in that
dollar
case.
yen going up? I know what you mean.
Yeah,
Whenever everybody says yen going up, they all mean dollar yen going up. I know
yeah.
exactly. It's always I didn't make the same mistake in FX, but yeah. But yeah, it is interesting that there's this serious divergence between risk assets all across the spectrum. Having said this, though, so are you also of the? I know you don't really make a lot of fundamental calls, but do you have an opinion on whether recession is imminent? Or do you think that that's a sort of a 50-50 proposition? You really don't have a strong opinion. How's your view on that particular?
I think it's probable, like more than 50-50. So it's more probable than not that we have a recession coming soon. How much exactly, I don't know. How big, it's really hard to tell.
Understood. Okay. But definitely, but sort of maybe 60-40 or even more so.
Yeah,
So
60-40, yeah.
within that constraint, within that framework, what would be your most highest conviction trade that you would want to make in that in that regime?
With what you're saying this morning, I would like to go short the S&P. I would probably try to wait for a pullback. Like this morning, it's been just going down steadily since it opened, pretty much. So I would like to maybe wait for a pullback, but then go short in the S&P.
Okay. So on a very short-term basis, you're negative S&P, but even on a positional basis, like if I sort of said to you, your trade for the year forward, would you be comfortable getting short S&P around these levels because you think that we're actually going to be maybe 5, 10, even 15% lower by end of the year?
These levels, no. To me, it's like in the middle of pretty much what we had as the high and the low recently. So I would want to maybe wait for price to go back below the 4,200 then I'll
Do
look
you
to
mind
short.
if we take a look at your chart? I mean,
Yeah,
I'd
of course,
love,
of course.
I'd love to see
Sure.
your sort of technical vision of what you're
Yeah.
seeing and where.
Let's see here. Yeah, you have to enable my chart.
Oh, here we go.
Okay.
Okay. Oh,
Yeah,
sorry. Just saw it. Okay, there we go. There we go. Okay.
Right.
So
here I have a chart of the S&P, right? So as I was
Yeah.
saying, we're like in the middle between what we had here as the all-time high before, 4,800, and then the 4,200 as the pullback recently. So
Right.
here, in my opinion, like in the middle of a range, I wouldn't want to necessarily go short long term. And this is
Correct.
making for like short term trades in that case. I would want to wait for price to go back to breaking this level, 4,200, to really take long term short positions.
Interesting.
In the event we would have a crash or recession.
Interesting. Got it. Huh. Okay. So in the near term, we're going to put you short the S&P. You don't have a choice. You have no pullbacks. It's market only in the trading battle.
Yeah.
So we're going to put you short at the 44.84 level as your opening trade.
I'm going to go short, but I'll try to be careful a little bit, and I'll try to put this stop loss.
What I was going to say is, here's one thing you could do, which you have a lot of freedom on, is you can do a probative, but you can do a small position now as an entry, and then if it goes up, goes up a little bit, you can add to the position at a more favorable price. Scale up with the position. You certainly have freedom to do all that.
Yeah, that's good idea. Actually, good idea. Yeah. So what I'm going to do is I'm going to go short here for the first half. Then I'll wait for a pullback the other half, which I'll tell you when it happens, if it happens.
Okay.
And I'll put a stop loss around here. So 4,550, basically.
Okay. Got it. Cool. Sounds good. Miki, talk to me, my friend.
Yes, sir.
Now that you're, I'm just going to call you not Crypto Miki, but Uber Bear.
Very, very shy, I will admit. But I have no problem saying these things that I'm saying because it's what I believe. All right.
So, given that, what would be your opening trade today on the market?
On the market, well, I would definitely be like in the same camp as Etienne. I would definitely short the market. Be looking for more shorts than longs for sure. But right now, like I know I'm currently in a short. From this top level right here on the Nasdaq, but if I had to enter a trade, maybe wait for a little bit of a bounce if we do get one at market open, but I'm not too sure about that. But right now, if we do short, I'd probably just enter a short right away with low leverage and just add to my position if we do come back up here.
Okay,
it's very possible. We might even do something like this, come back up, retest it, and then start to come down. You never know what could happen, but. Not very bullish right now.
But in the near term, like sort of on the immediate, right now. We'll get we'll get you short Nasdaq.
Nasdaq and the S&P. We might bounce at this level right here. I have like a trend line coming in.
Sorry, where's this trend line? What do you see?
Oh, sorry, not a trend line. It's just it's just a level that I've drawn out. Has proven to be resistance and support a couple times, but. Right now, if we do get
I'm curious, the levels that I see, you sort of have these staggered levels. Are these price levels? Are these some kind of derivative levels?
They're like a previous tops and resistances. Like you could see this time it was resistance, and then we dropped down. You could see it was resistance back here, resistance back here,
right?
And then once we come back, this extends into the future too. So we could get a bounce at the open right now too.
Right. So I see this is interesting to me because I see a lot of traders do this sort of historical resistance, historical support levels.
Mm-hmm.
Sometimes this is you're using hourlies, right?
Right now I'm on the hourly, correct? Yes.
Right. But are these levels drawn off the hourlies? Are they drawn off the dailies? What do they usually? What do you usually?
It depends. It all depends. Sometimes it's drawn on the 4 hours. I'll usually be on the 4 hour when I draw them. I'll look at the 4 hour candles in my opinion. When I look at
okay, can I ask you? Is there a specific reason why the 4 hour is sort of a sweet spot for you?
I think for me, like the 4 hour, my trades have worked better once I draw these trend lines, and it's a bigger candle close. It gives you 4 hours of trading, and if it gets rejected on the 4 hour, in my opinion, it's a little bit stronger resistance than on the 1 hour.
So can I run you through sort of like your methodology? We have these levels. You obviously have a bias. Do you wait for that bias to be confirmed? In other words, it hits the level, maybe comes off the level, then you trade it, or do you just assume it's going to fail at the level and you have a limit? Like, are you a type of a trader that just assumes your trade is going to work, or a trader that needs to see confirmation before you enter a trade?
I might enter my trade usually with a tight stop loss at the resistance level or the support level, depending what kind of trade it is. And then if it doesn't work out, I'll just wait to see how it plays out. If I get stopped out, I'll wait to see how the markets play it out. Sometimes, we just blast right through these resistance and support levels. They're not 100%. During a high market volatility, anything can happen. And, so at that point, my supports and resistances, they don't work too well.
No, of course not. But I'm actually curious, is there